Chat with Traders, episode 107.
This is your key to the minds of trading's elite performers, those who profit in relentless markets. Here on the Chat with Traders podcast, you'll hear about the skill sets and tactics that lead winning traders to win, so you can level up and become a better trader. Here's your host, Aaron Fifield.
Getting set up with the right broker is going to make your life as a trader so much easier. And though the right broker is going to vary between traders, TradeStation, our sponsor, won Barron's Award for the online broker best for frequent traders in 2016. Visit TradeStation.com for a full rundown of their brokerage services and the awesome technology which is available to clients. That's TradeStation.com. This episode is also brought to you by Squarespace.com. Squarespace is the simplest way to create a really slick website, blog, or online store, even if you've never done it before. If you've been thinking about doing a blog to write about your trading or whatnot, Squarespace is the go. Start your free trial today at squarespace.com and use the coupon code TRADERS to get 10% off your first purchase. What's up, folks? Thanks for being here. On this episode, I had an incredible chat with the great Anthony Saliba. Anthony is an options trader of 40 years. For his first 13 years in the field, he was a market maker on the CBOE floor, where he made about $8 to $9 million before 30 years old, and that was during the 80s. At which point, he was one of the traders featured in Jack Schwager's first Market Wizards book. Since then, Anthony's continued to scale up, making big moves, both through trading and various business ventures. We spoke for close to 2 hours about his experience on the floor, a trader education company that he operated, some of the non-cliché traits of great traders, longevity, and how he's grown wealth as a parallel entrepreneur, amongst lots of other things too. Now, on a side note, I'd like to let you know Anthony has a new book on the way, which will be released January 30th, 2017. The book is titled Managing Expectations, Driving Profitable Options Trading Outcomes Through Knowledge, Discipline, and Risk Management. You can find it now on Amazon by going to chatwithtraders.com/expectations. And Tony has actually offered to give away 5 signed copies too. To enter, simply go to chatwithtraders.com/Tony and follow the prompts. Please note this giveaway will close 24th of January 2017. Again, that link is chatwithtraders.com/Tony, Tony, to enter the giveaway. Hope you dig this episode. Anthony is a major boss. Enjoy, team.
After learning about you, I checked out your popularity with some of the people that I know that are trading. And you actually interviewed a friend of ours, Derek Wong, earlier.
Oh, you know Derek, right? Yeah,
Yeah, he's a client and also fellow Chicagoan living in Beijing. So,
that's very cool. I had a lot of fun talking with Derek. I sort of am trying to keep in touch with him a bit.
Brilliant guy.
Yeah, really awesome guy to have on the podcast as well. I mean, he's someone who has pretty much zero presence online. I just, the only way I found out about him is I have a Facebook group for Chat with Traders, and he just happens to be in the Facebook group. And so I kind of came across him that way, and we got talking, and I was like, I'd love to have you come on the podcast. So otherwise I probably would have never heard of him. But very smart guy. So how do you know him? From Chicago?
Well, no. About a year ago, a mutual friend introduced us. He needed some help. Being a futures trader, he needed help in options trading. So our company has been working with his company as they get ready to launch a few more options products in the Chinese market. And he led the charge for the first 6 months. We did some programs for him and his desk, and then he kind of handed it off to some other individuals that are looking to grow their sales trading business and their client business. So it's been a good relationship, and Derek was Johnny on the spot for everything, really took a lot of care in the relationship. And he was on vacation last week, but I would say we talk to him every week, keep abreast of what's going on. So
right, yeah, that actually makes a lot of sense, because he was talking about how options are something that's coming into China very soon, or hopefully soon. So yeah, that makes sense that you guys would connect over that.
And that's a good reason. I mean, that's one of the reasons why I wrote this book. I mean, there's a lot of options books. Heck, I wrote my first options book 16 years ago, but we wanted to do something that we could translate and cater to the Chinese market. And that's what we're doing with managing expectations. So it kind of fit right in, meeting with Derek in our current business.
Ah, right. Okay. So it's already got a Chinese translated version on the way.
Mm-hmm. Mm-hmm. It's translated, and we're just basically, the editors are cleaning up some of the vernacular, and the whole package will be available before the Chinese New Year. So it's interesting. It's kind of exciting. It's a whole, another chapter. This is really, Aaron, it's the last frontier, right? Options in China. I mean, they have 120 million retail investors. It could be huge.
Yeah, that's a big market. And I read that you also spent some time in Australia helping out the ASX exchange here.
I did, and I love your accent, because I lived there for 2 years, and I have to say the Aussies were the nicest people to us Yanks that you could imagine. Now, it was a different time. It was 20 years ago, but from what I understand, that hasn't changed a lot. It was so fantastic. I lived at the Rocks in the Sydney Harbor, and I dealt with the exchange and all of the market making groups, the banks, and a couple of the groups that were independent market makers, and literally was walked on the floor and turned out the lights the last day of floor trading in 1997. It was January of 1998.
Okay. So what exactly were you helping out with?
Well, at the time, OM, Options Markets of Sweden, had one of two electronic options exchanges. The other one being DTB, which turned into Eurex. And I was partnered with OM. Are you familiar with ORC Systems?
I've heard the name. That's about as far as it goes, though.
It's a Swedish company that is a professional trader, expert trader system that helps market makers, and they've evolved over the years to have algorithmic bots. And I was part owner of Research and Trade, which is the company that sold ORC. So what we were doing in Sydney was readying the exchange. The head of operations of the exchange had brought us in to help deal with the floor brokers and the market makers, and explain to them the transition from outcry to screen-based trading. We worked with them to develop rules that were fair for market makers, with quoting times and quote requests, quantities, and how, everybody was at risk of losing their job. It was the first onset of automation. And what we did was we helped with a fair and orderly transition. And then we also were installing our systems, which became the front end system for the marketplace, with the vast majority, if not, I think the only ones that didn't use us were UBS. They had their own, but everybody else used our systems. And I camped out there from like July of 96 to February or thereabouts, or March of '98. And I was a global commuter from my home in Milan to my apartment in Sydney, back over to my house in Chicago. Was ping pong balling all over the place as these electronic markets launched. And me and my company were helping Italy and Spain and Kuala Lumpur and Hong Kong and Sydney all make the transition to screen-based trading. Well, some had no options at all, but in the case of Sydney and Hong Kong, they had outcry and they needed a transition. But the people in Sydney at the ASX were the only ones that really gave us a lot of credit for helping them. They were wonderful. And some years later, maybe even 10 years later, there was a conference in the U.S., an OIC conference, and a young lady from ASX was on a panel with other leads, other CEOs and COOs of exchanges. And when I got to her, they said, well, what do you attribute the success of transition from outcry to screen-based trading? And she said my name. She said, because Tony Saliba was there to help hold our hand and make the transition a smooth one for everybody. And I almost fainted. She didn't even know I was there. And basically, my guys were my staff was with me, and they were like, wow, that's pretty cool. But yeah, we left it all out on the field, Aaron. We wanted to make, options that are in our blood. We believe in it as a great product. And we helped with the understanding of these guys who were scared, men and women who were scared about their jobs and how to transition from outcry to screen-based trading, and then also taught them how to use our systems, modified them for their basic, localization needs. And we've been doing that for 20 years.
Excellent. Well, let's go back a little further than 20 years, maybe another 20 years past that. Tell us about how you got started in trading. Like, you got into trading right out of college. Why trading of all things?
Well, actually, I started out as a stockbroker right out of college just because I didn't really know. I had a finance degree, a business degree from university, and I was offered a job to be a stockbroker. And keep in mind, this was the era of Jimmy Carter and the stagflation, the malaise of super high interest rates and super high inflation. And being a young 21-year-old assistant stockbroker was living hell. Nobody wanted to talk to you. I was in Indianapolis, heartland of the country, and most of these people were farmers or manufacturing families, and they didn't think a kid right out of school was going to help them with their investments. So I took to reading about options, which were only about 4 years old at the time. And I started following the options market. And keep in mind, back then, you would get your quotes the next day. Closing prices would come in the newspaper unless you called your brokerage company after the close and asked them, you get 5 names. They'd go look up for you, where IBM, General Motors, U.S. Steel, whatever, closed. So the youngest guy in the office, which at the time was me, had to stay late and take these calls as people would, come home from work hour after the market closed and want to know where their stocks and bonds finished. And one day I spoke to a young man who sounded a lot like me, had the same accent, happened to grow up in my own neighborhood, which I didn't know him. And his dad he was in school in Indiana, and his dad had given him a bunch of money to invest in Bally, which was a pinball machine company at the time. They also then ended up getting into fitness, which is what they're mostly known for. And Bally was a big mover, Aaron. I mean, it had huge volatility and would have intraday swings of 10 or 15%. They were perfect for options, and they had options dually listed between Chicago and New York. So I struck up a conversation with this young man, and he said, "Oh, it seems that you know what you're talking about." So he was calling for a quote, but he really didn't have an account with us. So he opened an account, and I started using what I had learned trading, as a retail customer in his account for him. And after about 3 or 4 months, I had doubled their money. And he said, "You got to get up here to Chicago and let's see what we can do." So I talked them into giving me a shot on the floor. And in the meantime, while I was getting ready to trade on the floor, I met a guy that I caddied for a few years earlier when I was in high school. And he was on the floor of the Chicago Board Options Exchange. And he said, "Hey, I really would like a guy like you to help me out and show me what's going on." And then I had to make a decision between going with the first group or this gentleman. And the first group had started putting a legal contract together with a lot of caveats, and I was going to be more of an employee to them. So I said, "Well, thanks, but no thanks. This guy's giving me a 50-50 deal." I went with the other guy, and within 3 years, I made him like over $500,000 and bought him out. That was in 1981 then. And it just came naturally. Well, let's put it this way. I studied a lot. This is in the days before computers. We had an online mainframe that we could plug our phone receiver into. They had those old-fashioned couplers that made humming and whirring sound to them. And we would get a printout on a Texas Instruments keyboard with a heat-sensitive printer, and we would get our theoretical values, which at the time a lot of people really weren't aware of what those meant or how to use theoretical pricing. And what I did, Aaron, is I would print out a block of values. Imagine a three-dimensional block of paper cube of time, price, and volatility. So what I did was I focused on a handful of spreads, and I would go out 6 or 9 months in time, up and down 20% in price, and up and down about 30% of the volatility. I was trading Teledyne at the time, which was a very high-priced stock and made wild swings. It was at the time a proxy for the market. IBM, Teledyne, Honeywell, Hewlett-Packard. There was a handful of individual stocks that people would buy and sell based on their market sentiment because the S&P 500, there weren't futures yet on them, and there was no tradable index at the time. So people would rush to the floor and buy options or sell options on 6 or 10 big moving stocks as a proxy for the whole marketplace. And Teledyne was one of them. So I would come to the crowd every morning, having studied all night long the various relationships between these spreads and how they would potentially move based on price movement and volatility movement. And then over time, I had all these prices. And it's somewhat of a tie-in to what we're still doing today, because a lot of people who trade options lose track of the relationship between options and various spreads. And what I was able to do was trade much bigger than my peers, because I was able to package my position into spreads that would allow me to eliminate 90% of the position and the risk that went along with that position by having finite spreads. You can imagine vertical spreads or butterfly spreads or calendar spreads, and then some variations on those themes, diagonals and some very light ratio spreads. And over the years, it became second nature to me to be able to walk into any crowd and sort of size that up. But as the personal computer became a thing, if you will, in 1984, I hired my first programmer and built a program that would allow me to do my risk management in the same fashion, automatically, programmatically through the software, so I could carry bigger and bigger positions and reduce my risk much faster, since I did it electronically on this. And that's how I got into the software business then, through that. So I was on the floor for like 13 years, throwing them around with the guys.
Yeah, well, let's flesh that out a little more. Now, just going back towards the start of your response there, you said that you made about $500,000 within the space of 2 or 3 years. If I understand correctly, it wasn't always smooth sailing for you right in that early stage, though. I think you actually came very close to losing all of your money. Can you tell us a little bit about what happened then?
Well, you're absolutely right. I glossed over that. When I was a clerk, before I started trading, when I was a clerk, I observed some of the biggest and what I thought best traders were at the time trading around me. And as soon as I got a chance to start trading, I dove headfirst into it, Aaron, and started building a big position. And volatility collapsed on me. And overnight, I lost the bulk of my capital, which I started out with $50,000, and I found myself 4 or 5 weeks into trading with only $15,000 in my account. And I was a subject of Market Wizards chapter. Jack Schwager, now a friend of mine, wrote about this. But there happened to be a plane crash that Friday afternoon where a lot of people died. And as I said to Jack, I felt like I would have rather switched places with one of those people. That's how bad I felt. And my partner at the time, who didn't know a lot about trading, but he did know about something about banking. And he said, well, pull your horns in, trade smaller, and just see what you can do with a tiny fraction of the style of trading that you were doing. So I left the rough and tumble crowd of Teledyne and went over to a much more mundane crowd of Boeing, and learned how to be more regimented in my trading, and was just trading one lots at a time, and was able to target. I had a goal of making about $200 or $300 a day, and I figured, okay, this would pay my seat lease, pay my bills, give my partner his half, and not a bad living for a 23-year-old who got to wrap up work at 3:00 in the afternoon. So I honed my skills over a few months of being very regimented. And I was a wrestler in high school, and then also a cross country runner. And if you know anything about these two sports, you have to be very disciplined. Not that all sports aren't discipline needed on all sports, but particularly in wrestling and your diet and in training for cross country and being alone for a long period of time. So I really brought out the discipline aspect of my nature. And then one day I was standing in the crowd in Teledyne, which was across the floor where I had been trading the first 5 weeks and not the next 3 months. Got really busy and I ran over there just to see what was going on. And before I knew it, I was trading in the style that I had practiced for 3 or 4 months in Boeing, very regimented, but very small, one lot at a time. And I said, whoa, I can do this in this crowd too. And I was able to chip away at my deficit and started making $1,000 a day and then $2,000 a day. And before too long, I was able to, I got back to even. And, I had a string of many months, over 70 months in a row, where I made six figures a month or more. And it was basically from very disciplined, regimented trading, which I think today those who are making money are following similar disciplined techniques. And punting is something that is anathema to me, but chipping away and having a small target, which becomes a medium target or a larger target every day or every week or every month, is really what I ended up doing and still try to instill today.
So I just want to go back to what you said earlier about how you would have been happy to put yourself in the position of someone who died in a plane crash. I mean, that's a pretty out there sort of thing to say. Why did you feel so terrible about losing that money? Was the fact that it wasn't entirely your capital? Was it you felt like you'd failed in some way? Was there anything more to it than the fact that you just lost the money?
Well, first of all, it didn't happen overnight. It had been 5 weeks of losing. It had been 5 weeks coming. And that Friday was a culmination of more than 50% of my trading capital's gone. Yes, it was somebody else's money, and that was a big factor. I felt that I had let him down. I felt that I was a failure. And I was devastated in that I didn't think there was any way back. And I really felt that, given where I started with, at the time, $50,000, which was a reasonable sum to start with, and now having barely 15 grand, how was I ever going to make it work? So I was devastated in that I felt I had failed, but also it was the man's name was Julian Good. It was Julian's money, and I felt really, really bad about that. And I remember walking off the floor and hearing about this massive disaster, and I just said, if I could do anything and if I could do anything good for somebody right now, I would switch places with one of those poor victims. And I think that was probably the depths of it. It wasn't like a rebound the next day or anything. It was not a V. It was more of a trough that lasted for a while before I shook myself out of it. But a lot of introspection and realizing it wasn't as easy as I thought. So it took a lot of energy, a lot of wherewithal to bring myself to carry on at the time. And I looked around and I thought, well, look, if I can make it in this business, I mean, I'm the son of a carpenter. My dad would come home with, swollen hands and cuts and, sore back and shoulder. I'm thinking, this is a much better living than he went through. So I still have a chance. And I literally sat down with my partner, and that's when he said to me, look, I know bankers who get overextended. They pull in their loans and don't lend as much to new candidates. They just lend smaller until they make a little bit of it back. And I think you should probably try to trade smaller and chip away. So he did bring something to the table in that regard, that he was able to talk some sense into me and get me back on the right track.
Hey crew, pause. Here's a brief word for our sponsor, TradeStation. As you probably know, TradeStation are highly regarded as a reputable online broker. But to decide if TradeStation are an ideal broker for you, I think there are 4 key things to consider here. Can you get access to the markets you trade? Well, TradeStation give direct access to most major markets, equities, ETFs, futures, and options. Secondly, can you get the right tools for the job? TradeStation are renowned for an award-winning platform so you can scan, analyze, and monitor markets and effectively execute trades. 3, can you get support when you need it? Around the clock, TradeStation's fully licensed brokers are there to answer any questions you have. And 4th, can you get competitive costs? TradeStation are ultra competitive with how they structure commissions and their fees, so I'd say yes. For more info on all of the above, plus more, of course, visit TradeStation.com. Support for this episode also comes from Squarespace.com. Squarespace is everything you need to make a website, an online store, or a blog for your business, or really for anything you can imagine. Doing a personal blog for your own trading is also not a silly idea. With Squarespace, it's easy, it's intuitive, add and arrange content all with the click of a mouse, no need to install anything or run updates ever. And you can do it all with zero web design experience. But even still, if you get stuck, award-winning support is there for you. So make your next move with Squarespace. Visit squarespace.com to start your free trial and use the coupon code TRADERS to save 10% off your first purchase. That's TRADERS for 10% off your first purchase. Now, this was an obvious low in your career. Was there ever another moment comparable to this one?
Well, so that was a moment of loathing and despair. But shortly thereafter, about 3 years later, in 1984, there was a event in the stock that I was trading, still Teledyne at the time, where the CEO announced that they were going to buy back some of their stock. And the stock, which was trading at about $180 a share, the target price was $200. So it was only a 10% increase to the current price, but he didn't say how much stock he was going to buy. And what happened, Aaron, was one of the biggest short squeeze scares in the history of the marketplace. I mean, to date, today, back then, it definitely was the biggest short squeeze. And that day, the stock closed at 230. So it rallied 50 points when it really, the tender price was below where the stock closed, because nobody wanted to be short the stock given they weren't sure how much stock this man would take. Well, my position, being a market maker in the crowd, was that I had to manage this massive position, which now was taking on all sorts of different characterizations, given that you had basically two expirations. You had the expiration of the options that the exchange, at the time there were quarterly expirations, but you also had this floating expiration based on the tender offer. And that was unknown. And time spreads went inverted, and reversals and conversions switched. And it became a very, very trying time that I had to scramble. I was scared. And what I did was I immediately started using my relationships with various back office people that I knew, and started calling around and looking for stock that I could guarantee would be not taken from me in a tender. Now, the first day, the stock was up 50 points, and people were not certain, what was going to happen. Volatility had exploded. And what I did was in fact, the gentleman who's in the news today, his name is Leon Cooperman, who was the lead analyst for Goldman Sachs at the time. This is 1984, for Teledyne, sought me out. We started having conversations about what we thought the characteristics of the stock might be. And for the next 3 months, I felt like a boxer on the ropes, trying to make sense of the trade that was in this stock, because we did not know how much of the float, how much outstanding shares the CEO would take. And the stock ended up traveling up to $320 a share. So back in 1984, that was just an unheard of move, where the stock almost doubled in 3 months based on a tender offer at 200. So as much as it wasn't despair as in the previous time some years earlier, this was trying my mettle and being able to defend against an unknown expiration, an unknown path of the stock. All the volatilities had whacked out, and being responsible to make markets in that crowd while all this was going on. So that was a very trying time for me, for sure.
Okay, so you didn't lose out on that particular trade, though?
Right. It ended up, because I was able to take an unorthodox approach locating stock, which is a commonplace today, but back then no trader actually thought of locating stock and getting guaranteed stock. Because of that, I was able to do very, very well. And I saw plenty of guys around me just get ripped to shreds. There's been over the years, it hasn't always been rosy. I keep forgetting about my flirtatious dalliance with Forex. We listed some options in 85, Aaron, on CBOE. At the time, we had the yen, the Deutschmark, the Swissy, French franc, and Canadian dollar. And I went in there because I was a pioneer, and I would try all the new things and try to help get them started as kind of a way of giving back to the exchange. And trading currency options was nothing like trading equity options. And I had a multi-million-dollar line of credit with the banks, and I figured I was all set up to really do some damage. And first day I went home long premium, and the yen moved like 4% that night. It was huge. It was you can look it up. It was in September of 1985, and there was a readjustment of the currencies, and the yen rallied against the dollar like 4 or 5% one day, maybe even more. And I thought, here I am backspread, and I'm going to clean up. And I had my little Quotrek machine by my bed, and it only showed the underlying because it was basically cash trading, interdealer market. And the next morning when we opened the options, they had crushed the volatility and my back spread lost me money. And I was like, whoa, how does this stuff work? And it was literally talk about being on the ropes. This was not only death defying, it was day and night because the currency never stopped trading. The only respite you had was at 4 o'clock Central on Friday afternoon, and you really only had 48 hours before it started trading again. And it was. I did that for 2 years. I lost a lot of money. I mean, I'm one not to give up, but eventually I'd throw in the towel. I probably lost about $2 million in those 2 years, plus all my time. But I learned a lot, and I met some great people. It just was so different. So different.
Right. So just continuing on your path, I'm not sure if this was in the interview you did with Jack for Market Wizards or if it was in another interview, but I understand that you had accumulated about $8 or $9 million by the time you were about 30 years old. Was this sort of money common amongst floor traders during that area, or were you an exception?
I'll answer that question in two different ways. One, I would say that it was hard to say. It's hard to say because we didn't really talk about how well we did. But my situation, which is a very little known story, except for my very close friends and family, I mentioned a minute ago that I like to give back. And, I was basically 30 years old and looked around and said, this is a great place. I love the CBOE and I wanted to make sure it could continue. So I felt an obligation to do something good for the exchange. And the year or two earlier, I had signed up for a program that a market maker would go around and do a marketing trip with a staff member. And, you were on the road for 3 days or maybe 4 days, and you'd go to some small town or a group of small towns in certain areas where people were interested in options and trading options. And you'd go to a Schwab office or a Fidelity office and answer their questions. So I had done these kind of things, and I'd also done other quote unquote giving back sort of activities like chairing. I volunteered for all the committees and I chaired a couple different committees, and I was one of the individuals on the very original market performance committee. And it was a committee of market makers and brokers to try to bring rules to the exchange so that market makers would act in a way that was healthy for the customer. Okay, better behaviors, all that stuff now has been ensconced in rules and regulations for decades. But I recorded all of these meetings with a little micro cassette, and that's basically the way I operated back in 80, 83, 84. And then in 1987, in August of 1987, I got a call from the marketing department, who I was very close to, and said, there's a writer who wants to do a story about options market maker. And his name is Edmond Andrews. And Edmond contacted me, and we could not come up with a date where he was in Washington, where he would be able to come into Chicago to interview me, that I wasn't traveling. And mid-August turned into late September, and we settled on October 20th. Okay, because I traveled, a lot at the time. Well, here's the point of the answer to your question. totally by kismet, this writer, great guy, total sponge of soaking up knowledge and information that was going on, was dropped randomly, just through serendipity, into the eye of a hurricane on the day the market crashed. And he was assigned to follow me around. Okay. And here I was, a market maker at the time in the SPX. And it wasn't very many of us in the crowd at the time. We had just switched to a European style option less than a year earlier. And there were a handful of us trying to breathe life into this institutional product on a retail floor. And I come to work, and somebody said, there's a writer here. His name is Ed Andrews, who says he wants to interview you. And I said, I don't have time for this. The market is collapsing. And instead of rescheduling and being rude to the guy, he said, well, can I just follow you around? And I said, yeah, what the heck? So I got him a visitor's badge, and he stood outside the crowd while I made markets. This was Tuesday after the day of the crash, and watched what happened. Okay. So the answer to your question is, he observed how I did and sort of overheard my staff and I, calculating our P&L. He stayed with me for about 3 days, and it got into his story and became the headlines of the article he wrote. He was just going to do a speculative story, see what kind of magazine would pick it up. And it was on the cover of Success magazine in January of 1988. So it was about 3 months after the crash, and he had put this big opus together. So I was the brunt or subject of a lot of wrath from the exchange, because they didn't want market makers having high profile. They had taken provocative pictures of me, basically just looking like I was having fun, nothing untoward beyond that, but I was enjoying myself, had my feet up and looking, like the cat that ate the canary. And this just sort of spread out around people on the floor and staff that I was making light of a day when a lot of people lost a lot of money, because I was short the market and had these explosion spreads that I would curate and nurture. But I would say most of us didn't talk about how much we made. And to say that I was an outlier or unusual, I don't think so. I mean, I think my peers did well. I mean, I know guys that did better than I did, but then there were also those who had roller coaster rides and didn't hang on to it, that they had made more and given it back and maybe made it again and so on and be on this, pendulum type or yo-yo type ride. But at the age of 30, so that happened when I was 32, and it was in the midst of the string of profitable months, which had started like in 80, 82, I think. So it was about a 6-year run. And I would say that a lot of guys down on the floor, they made their money in different ways. Some took more risk and made a lot more money. I tried to chip away and make a little bit every day, and then occasionally I would have great days where I would, hit the ball out of the park. And but there were a lot of people down there though that didn't figure it out either. It was a casino for some, just people who wanted to bet odds on where stocks were going to go. and options provided leverage for them more so than trading the stocks themselves. And I think that the younger guys like myself who were trying to make it their career were more serious about it, and probably by the time they were 30 had amassed some reasonable amount of wealth. So that's a long-winded way around answering your question, but I think that it's the most fulsome answer.
No, that was a really great answer, and I enjoyed that story about the writer coming and following you around during the crash as well. I mean, it's quite crazy how that turned out for you. You know, during that first, during those 13, I think you said it was 13 years that you were actively trading on the floor. You know, you came in your early 20s up till, you know, around about your 30s. What were some of the turning points, or maybe turning points isn't the right word actually, but major realizations that you had as a young trader? Like, was there anything that kind of clicked with you one day and that just sort of like changed or shaped the way that you traded, shaped your strategy? Was there anything that kind of you observed about markets that changed how you thought about your trading strategy? Does that make sense?
Yes. I don't know if there was one defining moment as opposed to a series of moments molding the feelings and opinions of what I was doing and learning more through automation and such. But in the very early days, it was the ability to, in the early days, it was the ability to see the structure differently than a lot of people did. Most people were really focused on either trading the Greeks, which they would be a slave to delta and gamma, and some went beyond to Vega, and others might just trade directionally based on technical analysis. Whereas, you know, I looked at the structure of being low cost or no cost spreads and being able to mold that position and have it be very, very easy to understand the risk and not distract me from my trading. I left the floor in 91, and there's a lot of people that came after, didn't get to the floor till after that had fantastic livings. I mean, I maintained a business down there that my brother ran for another 11 years. So, you know, we were heavily involved straight through. But in terms of actually being on the floor and trading those 13 years, I would say that I tried to go into areas that were new. I tried to do things that were a little bit avant-garde, or, you know, not the beaten path, if you will. And I studied. I can't say that, you know, I'm not a quant guy, and I'm not a, you know, particularly, I wasn't very good at math in school, but I could do the math fast enough in my head, and I'm very disciplined. So I would teach myself these relationships, and I always had that in my kit bag that I could lean on. And then over the years, I learned a lot more about theory and about automation, and got more into using automation to eliminate a lot of the drag or a lot of the superfluous activities of trading. So I don't think there was any one defining moment or one singular process, but I would say that when I die, the gravestone would say necessity was the mother of invention. And I think that I always looked at what the problem was and tried to figure out how could I solve it. So in the case of the story I told you about the tender offer, and everybody was having extreme pain about short covering, I went to the source to control short stock. When the market collapse, I mean, I had the benefit of owning a lot of really far out of the money puts, but I bought them because nobody else wanted to buy them. And I was buying them from retail brokers who were just selling them for the premium. And then I was able to parlay off of that into spreads that paid for them. And when the market came unhinged, I had some bullets, as they would say. So each stage of my life, I would say necessity has been the mother of invention. And that's to a great degree how I improved my trading and improved my view of the trading environment. And that's what we're doing today now with China. So, we see there's a lot of smart people in China. There's a lot of systems in China already. There's a lot of approaches that people are trying to say this is the easiest way to get there. But I don't think that's the case. My youngest brother happens to be the head risk manager for Goldman Sachs in the area of options trading. And last year, when the market literally came unglued in August of 2015, I remember it because it was on my anniversary, and he called me and he said, AJ, I've got a line outside my door of 30-somethings who are blowing up, and they could really use a dose of relative pricing because they don't know how to make heads or tails of their positions because volatilities have just gone off the charts. And these events happen maybe once or twice a year, but when they happen, they can be devastating for a lot of people. And it's been that understanding of the option structure that, I coined a phrase when that tender offer happened, Aaron, staying spread is staying alive. And spreads have been the fastest growing segment of the listed options market because you can identify the risk and because you can depend upon it. And as my brother was saying to me last year, he said, there's just too many people who depend upon systems to tell them where they are, and they don't have that extra set of tools to fall back on when the you-know-what hits the fan. So I think it's been a molding structure, and basically whatever the necessity was, I would try to figure out a solution for it.
After you left the floor, like you mentioned a little earlier, I'm not sure if this was directly the next step, but you started an education program teaching traders. Can you tell us a little bit about what this operation looked like and maybe your reasons for actually starting this program?
That's a great question, Aaron. You don't know how funny that is, actually, the reason. Well, so it's 1988, and I had about 23 or 25 traders trading for me on the floor, and each of them I would have to work with personally and teach them what I thought they should be doing, and I was getting tired of it. So I asked, I had a very small IT department, if you will, 3 guys who were just out of college, and they knew how to program in DOS. And I said, I need to find out a way to automate what I do. There's got to be a multi media package we can find or put together that would allow me to stop having to do this one-on-one. I mean, it's so tiresome now because the 20-some guys that were on the floor represented maybe 50 guys that had gone through the program and had been above average. So we were experimenting with video and the early nascent computer programs. And I met some guys that were building a simulator for gaming purposes, but they didn't know anything about options. I mean, they were working with a guy who thought he knew something about options, but he didn't. And I decided that I would invest some money and help these guys build a simulator that would also help me with my needs. Well, as you know about software development, they call it a rubber calendar, because things always take longer than you think, and they cost more than you expect. And when I was done, the number was pretty big, and I said, shoot, I got to find a way to monetize this. And I figured, very basically, if I had this need and had to go through this to develop my own solution, there has to be others out there that could utilize this solution. And lo and behold, the German market was about a year away from launching an options market. And I packed up my stuff, literally a metric ton of hardware, because it was all voice activated. You would train your voice. We figured out that there was about 45 words that you could have a full day of trading, or a full expiration cycle of trading. And it was basically 45 words or less: buy, sell, the numbers, done, various things that you would say on the floor. But it ran on the very early stages of Dragon voice recognition software. This is 1989 now. And it had to run on our computers. And by the way, all Germany was on Unix using Sun systems. And there we are on the Frankfurt tarmac with these giant crates full of computers, steel crates full of computers, bringing them over to Deutsche Bank. And I had spent months working with a gentleman who I had met. He blew out in 1987, but he was a brilliant guy, and he's subsequently gone on to have a great career as a risk manager. He's called the Risk Doctor, Charles Cottle. You might be familiar with his name. And he joined forces with me, and we put together a curriculum around our simulator, and we taught the German market, hundreds of guys, and some women too. Back in 1989, it was pretty much a male-dominated business, how to trade. And we delivered to the German market dozens of market makers and dozens of sales traders. And some of those guys are running the desks now, and some of them are actually, a couple of them are on the boards of directors of some of these banks. But we barnstormed from Frankfurt to Vienna to Milan to Madrid, Denmark, Stockholm, of course, Kuala Lumpur, and Sydney, and a few other places in South America, Colombia, and Central America and Mexico, and taught literally about 7,000 people over the next 10 years how to do the various things that they need to do in an options market, from market making to broking to being a hedging physical positions, and on and on. We had about 20 some courses. And that business still operates today. We're doing it now with the Chinese, and from time to time, other people come. They want to get that real. Shelley Natenberg has written a book that's one of the most popular books. Shelley's a great guy, and he really talks about how options work. And what we do and have done and continue to do is talk about how to put the trades on, how to move the trades around, how to manage a risk, and actually be the mechanics of the business. So that was another necessity, some other invention. If they would have delivered that simulator on time and under budget for me, I might not have gotten into the business. But in the meantime, now we have electronic simulator and courses in Mandarin, and it's just been a progression. So that's how I got into that business, and I really hadn't been involved with it from maybe 1998 till a couple years ago when we started doing stuff in China again. I had other guys running it for me.
Right. And were you ever afraid of giving away your edge? I mean, I'm not sure about the specifics that these courses actually taught, but were you ever concerned about giving away too much, like giving away your edge on exactly how you traded?
Well, not really, Aaron, because so idea generation comes in different forms, right? And so, if you find a niche or an edge in the marketplace that is fleeting and you don't want to tell people about it because you want to utilize it while it exists for yourself. If we were that kind of a program, then I would be worried about it. But really what we've done is evangelize about the ability to do better risk management, identify opportunities in your marketplace, stay disciplined, how to turn positions, losers into neutral or neutral into winners. It's better to have a great spread on at a bad price, for instance, versus taking a loss immediately because you made a bad trade. And so how do you turn that bad trade into a better spread just at a bad price? Things like that. So our edge or our secrets weren't such that we were exposing some holy grail or that we were going to tell the people we were working with something that we would need them to keep a secret, or else it would not be effective in the marketplace anymore.
Now, Tony, this is a cliche question, but as someone like yourself who's been doing this for 4 decades, you've 40 years of experience, I think you're the right man to ask, what are important traits of a good trader?
Well, it is a little bit of a cliche, and my answer, I'll try to make it sound less cliche than the answers you might have heard in the past, because first and foremost is discipline. Okay, and that obviously is the ability to stick to a plan and not be distracted from that plan. Okay. Another trait is creativity, and that would be to come up with a plan and to be able to see what might work in the marketplace. And the third thing would be the ability, humility or humbleness, to be able to understand that your plan was maybe 80% or 90% right, modify it, maybe even scrap it and try another plan. Okay. And a good sense of humor, I think, is very important, also, because the market giveth and taketh away, and basically you have, look at the people who swooned the night of Brexit, and then again on our election night, and seasoned pros were even panicking, but greatest buying opportunity in history that night. And I would say I don't know many people that actually took advantage of it. so you have to have a sense of humor that you missed that and keep going on. Obviously, intelligence and diligence, but the systems of today and the ability to have a embracing of what automation is available and how to. I know so many traders today that are still swivel chairing because some of the systems are not integrated, and I'm answering your question from the standpoint of an individual who's going to be trading rather than be a cog in a bigger machine working for a bank or a combine, which is also good. And some of those banks give you some freedom to do the things that you want to do. But for the most part, if you become part of a team such as that, you'll be dictated to some degree in what they want you to do. And I think that's good because somebody who's possibly more disciplined and more aware is going to give you a plan to follow. But I'm answering this as an individual who wants to make a living doing it or is trading as a side avocation. So those would be the highlighted aspects or characteristics of an individual that makes a good trader.
Yeah, those are really good, and I want to pull apart those a little further if we can. So you made a point there about systems and automation and that sort of thing. Can you just expand on that point? What exactly are you trying to get at when you're talking about systems and automation and traders not necessarily utilizing that technology as much as they could be?
There's two types of systems overview on a very high level. There's systems that are built for the brokerage company. So they're basically designed to be order entry and facilitate your execution. Okay. And I would liken that to an appliance that you would have in your kitchen that's very important to you, like a refrigerator, but you don't really think about it very much. It's there. It does what it needs to do when you need it, and you don't spend a lot of time thinking about it. But you're standing at your kitchen counter, and you also have a second appliance or device, and that would be likened to a system that is more focused on the trader's needs, idea generation, more workflow automation, helps you skip steps, and allows you to match your personal characteristics, your persona, with the data you need, when you need it, and how to use it. And that device would be more like your smartphone, your iPhone. It's something that you love and you can't be without. So you're standing in your kitchen, you got this very basic and important appliance, your refrigerator, can't live without it, but you don't think about it. And then you have this little device, which is the iPhone. You need it, you can't live without it. And those are the two types of systems generally that are available. One is built more by the brokerage firm to facilitate what you need, and the other one is built by maybe a third party so that it meets your needs and you can't live without it. Now, there are some brokerage firms that offer the second type of system also, but those are few and far between. And I've talked to a lot of traders, and I know a lot of traders, and nobody really settles in on one system. Many of them have multiple accounts because various systems offer something in a way that the other system doesn't. And so that user could be two separate users, and they would disagree. One would use company A and B, and the other one might use company B, and D because of their personalities and their characteristics. So it takes that aspect of a trader that I mentioned. It takes a person to understand, what's out there, how they can make it fit, and if you're going to swivel chair and use more than one system, what systems work best together. I know guys who use the second type of system, the iPhone type of system, by one brokerage to get their idea, but then they trade with the refrigerator brokerage because it's cheaper. and that their time frame allows them to swivel chair and make decisions and make trades versus maybe setting up a bot and letting the bot do the automation for their idea all in one shop. So that characteristics, and I personally can't tell you what the best system is because different personalities need different things, and there's some global systems that are available that are decent, and then there's some higher level systems that are very expensive that don't work in every marketplace. So it's really a matter of which market you're going to trade and what your personality is, what your risk appetite is for the idea generation. But you should understand that that's something. I mean, I know guys who spend more time researching systems and trying to find the system that's going to fit them before they actually engage in the trading.
And is that a good thing?
Well, if you're going to lose money and you're preventing yourself from losing, it's a great thing. Yeah. I was talking to an individual that runs a large Asian brokerage, and this person was telling me that they were surprised at some of their brokers who moonlight, if you will. They have side jobs consulting their customers about what happened in the market that day and answering their questions, this so-called coaching, right? And she was telling me that it, in some cases, went on for the better part of a year where these individuals would pay a lot of money and not make any trades. And I said, well, of course, they're scared and they're preventing themselves from potentially losing. But hopefully when they do trade, they're going to be much more well-equipped to deal with the loss if they do lose. And if they learn and they're actually more profitable when they do trade, then that's going to be money and time well spent. Now, I started my career, as I told you in the onset, totally different. I plunged in head first and almost lost everything. And I learned out of fear, total shock, right? But today, I think the markets are less forgiving, and there's a lot more that you can learn from before you do trade, so that it makes sense to, do your research, but probably more measured than some of these people that she was telling me about going 9 months before you trade. But it's an aspect, I think, that you just can't take for granted that your brokerage company is going to give you the best system, and then that's all you're left to use, right?
So your main point in this tangent about systems, etc., is that traders really need to map out their systems a lot better, think about their workflow, make it as efficient as possible. Is that kind of what you're getting at here?
Yes, and maybe make an inventory of what's available and what they do, and understand how they work together, if at all. And it's a combination of your risk appetite, your degree, amount of capital you have, the agency or brokerage that you're going to be utilizing, or multiple brokerages you're going to utilize, and understand what is out there and what you can use. I mean, I have contact with lots of traders from every stratum of trading, and only those that work for a very large company that's built their own system and mandate they have to use that, use one or two systems. But most people are using multiple systems. They're tinkering with them. They're swivel chairing. They're trying their best to optimize between those systems. And I mean, that's just a sign of the times where we are right now. But a trader should understand that there are choices, and it should be able to look at these various systems and know what they're missing by not using one of the other systems.
Okay. Now, when I first asked you this question about, important traits of a good trader, one of the first points you made was that a good trader has good discipline. I just want to get very clear on this point because you brought it up right at the beginning of our discussion, as well as, you said that discipline was something that really helped you dig yourself out of a hole when you were down to $15,000 coming from 50 grand initial balance. What is discipline as a trader? Like, what exactly does it mean?
Well, for me, it meant, and for people that trade for me today, what it means is sticking to risk guidelines, sticking to size guidelines, sticking to a plan that if you map out a plan, whether it is technical analysis on entry points, a carry trade, a price target that you expect, how are you going to play out that scenario and then stick to it so that if something unforeseen happens, you either are using your exit strategy or you're staying in the strategy because, let's say, it's a low risk strategy until it comes back. So the discipline is not to change the course of your plan because of events. It should be understood and noted what you're going to do and then stay with it. Otherwise, you can't determine why you didn't make money. Was it because you veered off course of your plan, or because the plan was wrong? And cheating on that only makes it more difficult to determine what went wrong and how it actually impacted your P&L and your risk profile. Sure.
And the other point you made was very non-cliche. It's not one I've heard before. And that is it's important to have a good sense of humor. And when you were talking about this point, you mentioned that the recent elections brought about one of the best buying opportunities. But you said that even many professional traders missed out on this and weren't able to capitalize on that. I'm just curious to hear, why do you think that was? I mean, was this just something that was easy to identify in hindsight, or what are your thoughts?
Well, so I think when you play back the tape, I didn't say many professional traders, but those that I know and I spoke to, I don't know any that really hit the ball squarely that night. And the reason why I think it happened was due to A, caught everybody, a lot of people off guard, and B, it was overnight, so you really only had a limited amount of trade that you could transact. You had S&P overnight futures and possibly dollar trade, but for the most part, for Americans, it was a shocking situation. I think most people, the majority of people, didn't expect that to happen. And now look at the value that's been created since then, just due to this this man being elected. So, I was on with Trader while that was happening, and I was getting the handles as the Dow and the S&Ps, plummeted. And, I could have pulled the trigger and said, buy some S&Ps here, but I'll just admit it, that I was a little bit shocked and a little bit scared, and I thought that the market was convulsing and may take a while to snap back. Now, I will say with 100% sincerity that the night of Brexit, that was a different story. I thought, for sure that this was a bunch of wailing and teeth gnashing and hand wringing that wasn't going to last. But that correction wasn't as deep, and the bounce back wasn't as immediate. But I to a man, I was leaving literally the next day or 2 days later for the UK, and I went around Scotland and Ireland and in London about 5 days each country, and asked everybody that I met, were they a Remainer or a Leaver, because it was so fresh. And it was a mixed bag of responses. So that activity on the night of Brexit, to me, I thought this is a great thing. This is overblown. This correction is overblown. This is going to be great, great for the UK, and great for other countries that end up leaving that globalist situation called the EU. But with Trump's election, I think that it caught all of us off guard, and really was. It's obvious now. Sure, he's going to cut rates and cut regulations, and all the things that he's said are very bullish. But it just didn't strike me that night that the market would digest that the same way that was on the face. And that's why you need a sense of humor, Aaron, because you could kick yourself for many, many months saying, how did I miss that?
Yeah, we've all felt that. That's for sure.
And people are still feeling it right now. It's like 1 month later, a lot of head shaking. And
Tony, I'd just like to ask you a couple more questions here, and then we'll wind things down. I'd like to touch on the subject of longevity. As I mentioned earlier, you've been in this business for 40 years now. It's a long time. How critical has change been to your success and longevity? Can you give us an example of how you've had to adapt and evolve with times?
It's a great question. Great question, Aaron. Yes. As I said earlier, necessity being the mother of invention, my adaptation, which has been critical, and, I got to say, I hate when people say, wow, you reinvented yourself, because that's kind of a weird term. I didn't, people who do that didn't reinvent themselves, but maybe they figured something to add on to themselves or to modify something that improved themselves. So my reinvention, if you will, to use that phraseology, has been to bring a solution to the problem that might have been a roadblock for me, or a speed bump as it went on. I mentioned the simulator being a tool I was in search for, and then ended up saying this has got to be a business, because it was harder than I thought to develop. And prior to that, in the early 80s, I came up with some smaller programs to assist me in my risk management, and that turned into a system that I ended up building and adding on, and becoming a a blockbuster that I sold, wrapped it into a company, and ended up, selling it for a lot of money to Bank of New York. And then another time I needed to change or reinvent myself, if you will, when I had a clearing firm in the mid-'80s and developed some software, which was a solution that ended up revolutionizing the marketplace because nobody had automated the margin package. Margin calculations were all done by the OCC and only by the OCC. So change, absolutely, very important and constantly changing. I mean, my wife says on a regular basis, that I got too many ideas and I give this too much thought to come up with solutions. But I usually sort through to find out which one is the right one. And I mentioned a little bit before about the refrigerator and the iPhone, and you will see shortly one of the projects we're working on will bring that to fruition. And that's just another aspect of the change that I'm undergoing right now with various people that I'm working with to address some of the problems that are in the marketplace today. So the answer to your question is I usually change by developing a solution, whether it be a software solution or a combined software and some sort of social aspect in the case of those classes that I developed and delivered for so many people around the world. And while I was doing that, I was meeting great traders or great traders to be, and ended up backing some of them in various markets. And through wisdom that I had learned and their youthful exuberance and intelligence, made some great progress in a number of the new marketplaces that I wouldn't have had I not done that. So I would say solution provision has been the way that I've dealt with change.
Okay. Now, that's a really good answer. And I'm really keen to ask you this next question. I think you may have already answered it to a certain extent, but how have you been able to scale your wealth? At 30 years old, you'd accumulated about $8 or $9 million in trading profits. What things have you done to compound that into the fortune you have today?
Well, I've diversified, and let's put it this way. I mean, I would be disingenuous to say that everything that I've done has been a profitable or automatically positive activity. And as I like to say, a parallel entrepreneur, because I do have multiple projects going at the same time, you end up, kissing some frogs on your way to that princess. And what I've done is to branch out into other aspects of business. We own, insurance company and a golf resort in Northern Ireland and healthcare facilities. And so what we've done is been able to utilize what I learned in trading and get into other businesses that have nothing to do with trading, but you could see the discipline and the risk management, if you will, the reporting, the identification of where you're making money, the P&L identification. So I've taken those things. I still stay involved in trading and in training and in systems development for options trading. But in terms of scaling the wealth, I have my family, my nephew and my brother, who are very good at helping find opportunities. They look at a lot of deals and been involved in a number of, some have gone belly up. We were involved in Fisker, which got screwed by the U.S. government, was better than Tesla in our opinion. But then, we've been involved in other bigger deals that have done well, and some have IPO'd, and others have just been, spinning off returns. So that's how I've been able to deal with it, having this family office and being able to, work with my family to do that.
So with that being said, how do you encourage other aspiring entrepreneurs and traders to think about money, wealth, and success?
That's a great one. Because we all are at risk of letting it get out of hand. And, I was born into a very, I don't want to say poor and impoverished, because that would be unfair in the relative sense of global poverty. But, my father was a carpenter. He lived hand to mouth. He fed and clothed us. There were 7 of us. Okay. And we learned to live without. We went with very little. We wore hand-me-downs. We respected value of a dollar. We were very good at trying to maintain a lifestyle on a very small amount of money. Leftovers were always eaten, and you have this upbringing that helps you respect the value of a reasonable living. But we all run the risk of making more than we ever dreamt we would, which is in my case. And you need to stay disciplined in that regard too, because, and I'm not saying to be a penny pincher or curmudgeon-y Scrooge type, but I think for young people who attain successful trading results, need to stay grounded and need to understand that you can make a lot of money and keep it as long as you don't start to get crazy about habits, because the crazy habits usually tend to break down your discipline. Now, having said that, I know guys who have houses in multiple states. Some have boats at those houses, and I don't think that's excess if that's how they want to manage their lives, and they end up having trading style and trading skills that allows them to do that. But sometimes those become distractions to their businesses, and sometimes it gets to be more of a burden. So that discipline permeates my life. I mean, I have multiple residences too, but I think I knew or know when to draw the line and be able to sort of live within a reasonable, 24 hours of the day boundaries, and be able to enjoy and enjoy it and not be let it go to my head.
Yeah. Do you think without those humble beginnings and the upbringing that you actually had, that you would have had the drive to reach the levels of success that you have today?
Wow, it's another spot on question, Aaron, because no, I look at the kids of the generation of my kids. I have young kids, and there's I hate to say it, but a sense of entitlement. It's a natural propensity of parents like myself who've done well to give their kids everything. And there's an old saying, I'm sure you've heard it a million times, but I heard it a million times when I was, in my teens, and that was, success skips a generation. And I always wondered what that meant. And sometimes I would think that it skips a generation because maybe the generation that were the children of a successful parentage would maybe not be as smart, let's say. But I think it has everything to do with not being as driven and not being as hungry and not being as worried or careful about their future, so that they would look out at everything and see it as a glimmer of opportunity versus, well, what does this world owe me? And I see that in a lot of the 20-somethings and, dare I say, maybe even 30-somethings, but the millennials. There's a sense, not at all, but in a reasonable amount, that there isn't the kind of hunger and the ability. If you tick through the things that I said make a good trader, you have to have the discipline, and you have to be able to readjust, and you have to also take a loss and be able to endure losses. I don't see that so much. And I think it's possibly because their parents have taken good care of them. Not that my parents didn't take good care of me, but it was a different type of care. It was a subsistence or existence, and not a preeminent spoiling of the children. So the answer to your question is, you're absolutely right. If I didn't have those small beginnings, I don't think I would have been as driven as I was and am today. And I think that that's just something that you can't replicate. Now, I'm not saying that children of wealthy parents can't be hungry. Obviously, if their parents help them get started, that's a great advantage. But I'm sure there are plenty of offspring of wealthy parents that are hungry. It just takes more. It takes an extra special child, an extra special person to have that drive. Now, having said that, there's creativity that springs from a person as a savant, and they may have a special characteristic or a special trait to be able to create something, and their upbringing may have no bearing on how successful they are because of that creation. And what I mean by that is, maybe a guy like me had to try it multiple times to get it right, and then through hard work and discipline was able to succeed, versus someone else who came from rich upbringings but had a special gift or a special level of creativity that they, develop the power wall or the space elevator or something that is revolutionary, and their upbringing becomes secondary or even tertiary to what they're doing. So, but I do think that mine had a big role to play with me.
Yeah. Another excellent answer there, Tony. And I know we could keep going for so much longer, but let's leave it at that for now. I've really enjoyed this conversation. Thank you very much for coming on.
Aaron, it's my pleasure to meet you. You're an awesome. I'm telling everybody I know about your site and your service. I think you're an awesome interviewer, and happy to do it again if there's something else, or fill in the blanks. Maybe there are men and women, young men and women, that would benefit from some of these things in your audience.
Yeah, no doubt. And I was going to say that, maybe we should try and set up a part 2 at some point, because like I said, there's so much more we could talk about. But before we close this out, I want to ask you about this latest book, which you've just released. It's titled Managing Expectations. And I know you've written a few books in the past. What's this one all about, and what can someone expect from reading it?
Well, this book so my previous books were a little bit more basic and beginner. They were targeted for individuals to use somewhat as a workbook. We wanted to be different in terms of with quizzes and tests to go back and understand, so the individuals could understand what they were doing. And in this book, we have 24 chapters devoted to synthetics. Obviously, we cover the Greeks, but we talk about how the Greeks react versus 10 different strategies that we show, and then how to change these strategies, the risk in the strategies for different market situations. So it's kind of an intermediate level book. It's coming out in Mandarin. We did this mainly for the Chinese market, but we've already had a lot of pre-orders, and people who have read sample chapters have come out and said that they thought it was additive to the genre. The package that we're offering has also the audio book read by me and the ebook. So we're looking to fit a niche of newer options traders that have not been exposed to relative pricing and the ability to look at synthetics and look at different strategies in multiple ways. So it's something that you might be able to find if you read a lot of different books and maybe not get all of what we have, but we try to sum this up as the working man's options trading book, and that's where we're at on this.
Yeah, I mean, I think if you're into trading options, you'd be crazy not to read it. I mean, obviously you've had 40 years experience in the game, all packed into one book. It's very cool. And I have to ask you, what's your reason for titling the book Managing Expectations?
Well, I think so much of what we do in trading is about testing yourself and being able to understand where you want to go and what is your level of accomplishment. So just like I mentioned in the very first question you asked, I started out by not really thinking or desiring a certain amount of profit each day until I did. And then when I did and I said, I want to make $300 a day or $200 a day. And when I hit that target, I was able to understand that my success had been reached, and I managed my expectations and felt comfortable saying, okay, I put in a good day's work. Same thing can be said when you are trading in a stock or trading in an index or an ETF. And what can the market give me? You need to be able to manage that expectation and gauge your success around that so that you are not, constantly swinging for the fence, constantly trying to hit that home run versus getting on base with a single or a double. So, working with my partner, Larry, so Larry Schwager and I did this together, and we just liked that dimension or that angle, saying that, you need to be able to know what slice of the market you're going to be able to operate within.
Well, what I'm going to do is I'm going to tack an outro onto the end of this interview here. So guys listening, I'll give you full details on where this book is available and how you can get your hands on it. Tony, thank you very much for coming on the podcast. I appreciate you taking 2 hours out of your day to speak with me and share a whole lot of insight with everyone who's listening right now. So I truly appreciate it.
Aaron, thanks so much. I look forward to meeting you someday also.
Hey there, I mentioned I'd tack an outro onto the end here for how you can get Anthony's book, Managing Expectations. So listen up, especially if you are an options trader, then I think this book will serve you well. The official release date of Managing Expectations is the 30th of January 2017. Though it is available for pre-order on Amazon already, just go to chatwithtraders.com/expectations and that'll take you straight to it. Also, as I mentioned right at the beginning, Anthony's going to be giving away 5 signed copies to Chat with Traders listeners. To enter, all you got to do is go to chatwithtraders.com/Tony. The giveaway closes on the 24th of January 2017. Again, that link is chatwithtraders.com/Tony, to enter. Thank you so much for listening. Enter the giveaway. Pick up a copy of the book if you don't want to wait. And if you want to impress me, please share this episode on Twitter. Thanks again. I will catch you next week.
You've reached the end of this episode of Chat with Traders. But rest assured, there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes. And we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.